Can you dive in for a moment and just describe your investment philosophy? You touched on ETFs there, but if you were to write your own one paragraph investing autobiography, what would it say?
I almost think, Emmett, that someone's investing philosophy, at least for a fundamental based investor like me, should be too boring to fit into a good media soundbite. But I'm going to try anyway. So you're always trying to exploit the cognitive weaknesses of other people in investing. And that sounds bad or it sounds kind of predatory, but they're trying to do the same thing to you. They just don't realize it. In other words, markets are basically broadly efficient. And that's good because if you had some great idea that never came to pass in terms of the market coming to recognize it. If you knew the Hope Diamond was buried under some company's headquarters, but there's never going to be a catalyst to find it, then it wouldn't make sense to buy that company. So you want markets to be efficient, but not always. And the way you do that, the way you exploit that is just by saying, okay, people can be smarter than me, but I'm not going to try to play that. I'm not going to try to play that game, excuse me, or I can be more patient. So patience is the game for me, for I think anyone who's going to outperform in the long term. I enact that by buying mostly ETFs, low cost,
Mm.
boring ETFs. This is the unsexy part. Now, the more exciting part, when I buy stocks beyond that, I have a reason. I always have a reason for buying a stock. Like, is it going to beat the S&P 500 or not? Because I'm an American, so that's the index I compare to. If not, I'll just put more money in SPY or some index fund, right? I look for no thesis stocks. I don't want to have a lot of contingencies that have to go right for my portfolio to do well, for my company to make money. I want to see companies who've done the same thing over and over, and they can just wash, rinse, repeat year after year. I want to find stocks that don't mean revert. In other words, most companies tend to do well for a little bit if they do well and then collapse to the mean and sometimes just disappear altogether. But if you look at companies like Walmart, like Amazon, like Disney not right now is not a good example, but traditionally Disney, these companies have done better than their peers for long times. That's rare, and that tends to be underpriced in financial models, in my experience. And then finally, I'll say I look for the occasional biotech or whatever aggressive play if I think I've got a really strong thesis. But that's the icing on the cake. Those are small positions. Sometimes they do well, sometimes they don't. So
Mhm.
mostly ETFs. That's the biggest block in my food pyramid. Then no thesis stocks, and then the occasional sexy position.